Hello and welcome back to ABG Investor Days. My name is Rebecca Järdrup and I work here at ABG as an analyst in the IT and tech sector. With us here today we have Simon Gustafsson, the CEO of Adtraction. Simon, please go ahead with your presentation.
Thank you very much. I'm also one of the founders of Adtraction and a big shareholder. We floated Adtraction on Nasdaq First North in December. So I think that Adtraction may be new to many viewers, so I will do this sort of from the start. I will go through our business model, our financials, I will say something about the market, and then I will spend some time explaining on how we try to grow. I think a nice way of starting to explain our business model is looking at this picture. Here is a site called Elle. It's a women's fashion site, and what's going on here is that they've written an article about spring coats, and what they do is they write something about a certain coat, then they provide a link to an e-commerce company that sells that specific coat. They use attraction tracking links for that purpose. And what happens is that if a consumer enters the Elle site and buys a coat, Elle will get a commission. If the purchase happens at H&M, for example, Elle will get a commission for H&M. Adtraction will get part of that commission, and H&M is happy because they spent their marketing budget wisely. They only paid for an order, and hopefully the consumer is happy too because she just bought a beautiful coat. This is the essence of our business model. And in the next few slides, I try to outline this business model in text. So we at Adtraction call our customers advertisers. So what we do is we help our advertisers sell more. They only pay for results or an order. We help our partners, that can be sites such as Elle, monetize their traffic and content. That is, we help them make money. And I think it's also important to understand that we are a tech company. Everything in our business happens in our proprietary platform, and we spend a lot of time and resources developing that platform. From a financial point of view, we're about profitability, growth, and cash flows, and I think we have a strong track record in this area, which I will show later on in this presentation. This is another way of illustrating our platform. So in our platform, we have 7,500 active partners. These are typically sites with great content, and visitors are interested in buying something, and they face a problem. How can they make money? And basically, the different options that they have is that they can try to charge fixed fees. They can get money from display ads, from click ads, or they can use our business model, which is that they only get paid if they generate an order. And of course, it's easier to generate display impressions and clicks than an order. But the beauty of our business model is that if the conversion rate is high, then partners actually make more money using our business model than any of the other business models. So what's interesting here is that a lot of the times our business model is actually more cost efficient also for our advertisers. They only pay if there's an order. And the reason that our business model is more cost efficient is that advertisers do not waste any money on impressions that don't generate clicks, or clicks that do not generate conversions. So the beautiful thing here is that incentives are aligned. Partners make money when advertisers make a sell, and it's the same story for Adtraction. We only make money when partners and advertisers make money. And for us, this is a volume game. In the fourth quarter, we generated close to 2 million transactions. Typically, that is a sale of some kind. And this is what our platform is about, scale, putting more and more things into our platform. So we call our business model partner marketing. We used to call it affiliate marketing, but we find that term is a little bit too narrow. In the past 5-6 years, we've really expanded our partner base, and we think that the term partner marketing is more relevant. I would also like to say that the term affiliate marketing is associated with iGaming or online gambling to a great extent. We have nothing against those industries, but We don't work with those verticals, so from that point of view, affiliate marketing is a little bit misleading too. We launched our service in 2009, so we've been doing this for a while now. We have, it says here 90 employees. I think we're closer to 100 employees now. We are currently employing a lot. We started expanding internationally around 2015, and what we found out then was that in order to make good business in Finland, we need to be able to speak Finnish, and in order to establish good relationships in Finland, we need to have feet on the ground. So that has been our strategy, and we're currently present in 12 markets. We used to start sort of slowly with these markets. We would hire 1 or 2 people, and once we had a little bit of traction, we would hire more people. Going forward now, we will probably start with bigger teams when we start a new market. And I can also say that from a cost and profitability point of view, it's obviously pretty expensive to have this many offices. But what we're trying to do is setting the stage for future growth. Currently, we have great margins in the Nordic. We're actually profitable in almost all our markets, but margins are far better in the Nordics because of a greater volume. This will happen in a few years in the rest of Europe. I said before that we were about growth, profitability, and cash flows. And here I think we illustrate that we do have a pretty strong track record of generating growth. We've actually grown every year since 2010. If we look at the growth rate since 2010, it's around 50%. The last few years, which is perhaps more relevant, it's been around 30%. So some things here should be commented upon. We see a little dip in 2020, a much lower growth rate, and that was because we have customers in the finance vertical, consumer loans, and many loan providers tightened scoring because of increased risk related to Corona. So we actually saw a drop in sales related to our finance vertical in 2020, and e-commerce, our other main vertical, had great growth rates in 2020. In 2021, we've seen a recovery, as you can see here. We're back to growth in both verticals. I should also say that the pink little box that you see here on top of the sales bar is pro forma sales. So this just shows what our sales would have been if we had owned some acquired business the full year. I will take a deeper dive into that a little bit later on in the presentation. I should also say that for us, it's pretty difficult to keep track of what is organic growth and what is acquired growth. And the reason is that we put everything on our platform. Obviously, we know what the sales are of companies that we buy. But quickly, once we migrate the business to our platform, it's difficult to keep track of that. So we will not make a difference between organic and acquired growth. We're just talking about growth. That's what we're interested in. Adtraction is actually more interested in gross profit than in sales. And the reason is, of course, that gross profit is what we keep. We keep around 20%, and 80% is sent to partners. So internally, we only talk about gross profit. It's the same thing here. You can see a little dip in 2020, and then in 2021, there is a significant recovery and also some additions from acquired businesses. I would also say that we're pretty good at converting gross profit to Ebitda. And by Ebitda, I should say that what we do, the adjustment that we make is we add back goodwill amortization, because Adtraction reports under the K3 accounting standard, under which goodwill is amortized. So we just add that back. That's the Ebitda. And the pro forma numbers here is we've also excluded IPO costs. So we're generating healthy profits, I would say. And if you relate our Ebitda to our sales, we may look like a low margin business. Our Ebitda margin has been around 5% the last couple of years, but we think it's in many ways more reasonable to relate Ebitda to gross profit, and then the margin has been around 28%, because again, gross profit is what we keep. And if we look at pro forma numbers, the margins look even better. We're also good at converting Ebitda to cash flow, and The reason here is that what you see is what you get with our financial reporting. We do not have any weird capitalization of R&D expenditures, etc. So there's a very strong correlation between EBITDA and cash flow. This cash flow pattern looks a little bit weird, and I would say that the reason is that cash flows are much stronger in 2020 and 2021, and that's because we focused a lot more on that since we knew that we were going public and we need to demonstrate our ability to generate strong cash flows. Before, it didn't matter if a customer paid on December 31st or January 6th. That really matters now, so there's a lot more focus on it. Here's the pro forma I've been talking about, and all we do really to reach the EBITA pro forma is we start with our reported EBITA of 35 million. We add EBITA of Klara Lån and Digital Advisor, two acquired companies from the period when we did not own them, and then we add back IPO costs of 4.2 million, because we don't expect that we will have IPO costs next year. So in total, we end up with a pro forma EBIT of close to 45 million. The reason we do this is that we want to establish what the base level is. Our base level sales going into 2022 is 740 million. Our EBITA is around 45 million. But of course, our reported EBITA is still 35 million. Nothing has changed there. And to summarize the financial situation, we have a beautiful growth in 2021, around 30%, and also a beautiful profitability, where we actually see increased margins if we look at the pro forma numbers. Going back to our business model, we have 1,400 advertisers. We operate in two different main verticals. Finance is perhaps currently 35% of gross profit, and e-commerce 65%. By finance, we mainly mean consumer loans, but also some investment and savings products. And e-commerce is basically everything else. Here we have listed a couple of advertisers that we're very proud of. And these are, I believe they're good examples, because you can see the variety in our advertiser base. So C More and Viaplay are streaming services. Åhléns, Lindex is health and beauty and fashion. Webhallen is consumer electronics. Hallon is a telco operator. Lendo, Medmera Bank, Samla are loan providers or loan brokers. Going to the partner side of things, we have 7,500 active partners, and a partner is active if they send traffic to at least one advertiser in a given month. We divide the partners into different categories. The first one and biggest one, most important one for e-commerce, is content. And a great example of a content partner would be L. They write content about products that consumers are interested in, and then they link to those products. Influencers is another category. What's special about our influencer approach is that, again, advertisers only pay if influencers generate sales. So historically, influencers on Instagram and YouTube and so on have charged a lot of fixed fees. I believe that that's changing, because influencers are getting better and better at generating sales and conversions. The third category is affiliates, and this is the legacy of our industry. That would be price comparison sites, it would be voucher code sites, cashback sites. Those categories are still very important, but it's just one out of five categories. The fourth category is tech, and that is typically something that happens, some sort of technology that's installed on an advertiser site for retargeting purposes, or it can be an app. Examples of tech partners are VE Interactive, if you want to check that out, and actually Klarna Media is a big and important partner in our network. Finance, that is simply sites that compare different finance products. So this is the world as we see it. So you know, our positioning and our competition, and the fundamental thing in our industry is CPA. That is, advertisers only pay if there's an order. CPA means cost per action, and this is the common denominator for all competition in our industry, and I would say that this is actually what defines our industry in a way. Adtraction is a full service network, so an advertiser could log into our platform and manage their own partner marketing campaign, but we know that the results are much, much better if one of our account managers is involved, because the account manager knows everyone, knows what works, and therefore the results are much, much better with the involvement of an account manager. We're also locally present. Again, that is a little bit expensive, but we're setting the stage for future growth, and we really believe that we need to have feet on the ground to do good business. Adtraction is still managed by founders. We think that's an advantage because we care and we have a very strong sense of direction. We're also present in both e-commerce and finance, and that's nice because sometimes e-commerce grows quicker, sometimes finance grows quicker, and overall we have a more even growth pattern. And when it comes to growth, our growth strategy is simply this. So if we just stick to our installed base in our existing markets, we will still grow because there's an underlying market growth. In Sweden, the underlying market growth for e-commerce is perhaps 15%, and it's probably sort of the same across Europe. Of course, we try to do more than that. We try to win new partners. We try to win new advertisers. And also, we're trying to move into new countries. So in 2021, last year, we started an office in Austria. This year, we've announced the French office. Then we've made acquisitions. So we've acquired a company in Switzerland called Connects and a company in Denmark called Digital Advisor. What they wanted was access to our great platform and our international distribution. We've also acquired a small Swedish loan broker called Klara Lån. And in 2022, we have some very specific plans. Again, we're starting in France. That has already happened. We're currently negotiating about starting in Italy. This will increase our OPEX by 8 million. And just to be clear on what's going on there, it's not like a one-off cost of 8 million in the first quarter. Instead, this will be basically cost of salary and so on throughout the year. And the French team is already in place. The Italian team will probably start working in Q2, hopefully. Of course, we also try to hire more people in our existing markets. We're basically growing everywhere. The third thing is acquisitions. That's a little bit difficult in this market climate. It's difficult to know what the correct valuation is, but we know that these things take time, so we try to keep up the discussions, and then sometime along the road, something will happen. And of course, there's continuous development in our platform. So I will also say something briefly about the share and the ownership structure. We did our IPO on December 7th. That was the first day of trading. The IPO price was 60. I believe the share price is currently around 45, and the market cap is around 575, I think. And we have a net cash position of 150 million. Again, we have pro forma Ebitda of 45 million and the growth rate in the first quarter of around 30%. So founders and employees own 49%, founders own 45%, I own 21% of the company. Anchor investors from the IPO own 23%. Some early investors who are not working for the company own 17%, and retail investors from the IPO own around 10%. So what we're trying to do here, and why I think Adtraction is an interesting opportunity, is this. We have a strong financial development since we started. We've delivered growth and profitability every year. We're an international business where we have great margins in the Nordics, and as we grow, we will have great margins also in Europe, and we really have a strong foothold out in Europe now. We have a great business model. Advertisers only pay for results. And we're acting in a fast-growing industry. So there's a growth for e-commerce, there's growth for online advertising, there's growth for consumer loans. And lastly, we're owned and managed by founders, and we have a strong sense of direction. We know that we want to keep growing the company. We know that we want to expand internationally. And that's it for me. Thank you.
Thank you very much, Simon, for the presentation. I'm very interested in the growth journey going forward. And you mentioned that you're expanding to other parts of Europe, for example. In general, what are important factors to grow in other parts of Europe?
So first of all, we need to be there, and it's fairly difficult to establish our business in a new market because we basically start from scratch. We have 0 partners and 0 advertisers, and therefore it's important to hire people with good relationships, and that will help us. And also we try to capitalize on our existing network. So, for example, we will bring advertisers from Germany into the French market and so on. So our strategy now has been to cover all of Western Europe, and with France and Italy, I believe that we are doing that. Those are very interesting markets. A lot of happen. So e-commerce used to be fairly slow in Italy, but a lot of things have happened in Corona. That's why we're going there now. And now we cover Western Europe, and then we'll see what the next step is.
Very interesting. So, is the most efficient way to enter those areas through M&A or hire your own people straight away?
So it's clearly much quicker if we can do it with the M&A. We've done this in Denmark and Switzerland, but there also needs to be an M&A opportunity. And we can also combine things. Perhaps we start something and then we understand what's going on in the market, and then we know what to acquire. So I'll be honest and say that we're fairly new on the M&A scene. We've done 3 transactions. I think we have learned something, and we know what we want to do. And you know, we're constantly looking for opportunities. We know after the IPO, we also have the resources to do acquisitions, so we're certainly interested in doing that.
Yeah, interesting. And in general, so far, how long does it take to until a new market gets profitable?
Yeah.
In general?
So that depends a little bit, but if I were to say something in general, it's like 12 to 24 months, depending on what existing relationships there are and how much we hire and so on. So for France and Italy, it may take a little bit longer because we're starting with slightly bigger teams, but somewhere around that.
Yeah, yeah. And why is it so crucial, you think, to have those local offices in those areas?
I mean, we tried not having local offices, and it didn't really work out for them, because we found out that it's very difficult to win a customer in Finland if you don't speak Finnish, and it's very difficult to win partners and build a great relationship if you don't know who people are, etc. So this really is the way forward.
Yeah, and also you have 2 different segments, from what I understand, financial and e-commerce. What are the main difference between those 2?
So e-commerce, I think everyone knows that there's an underlying growth in e-commerce, and e-commerce is great. We really love that business. I would say that it requires more account management because there are more products for each. You know, one advertisers may have 50 or 100,000 different products, and then we need to deal with all of that. So it's more work intense. Then the finance products are easier to handle because it's typically just a loan with certain terms. So fewer account managers are required to handle the advertisers. And also there's a regulatory environment which is more complicated in the finance sector. So sometimes we see regulatory changes that has an impact on our business, and then we sort of see a little bump in the road, and then normally we bounce back. And with e-commerce, we haven't really seen that, except for the different Corona ups and downs.
Yeah. Okay, Simon, thank you very much for this presentation and for the Q&A session. And thanks everyone for listening in.